7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Seems everything costs more these days. Gas, groceries, and when's the last time you checked your wireless bill? When it comes to big wireless, if you're staying, you may be overpaying. Switch to Consumer Cellular to get the same fast nationwide coverage without the big wireless bill. Plans start at just $20 a month, and now for a limited time, new customers can get their second month free. Call 1-888-FREEDOM, visit a store near you, or consumercellular.com and start saving today. Plans include $5 credit for auto pay and e-billing. Taxes, fees, and other third-party charges will apply. See website for additional details.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer. Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Friday here on the Financial Exchange. It is Chuck, Mike, and Tucker with you. And top story today at 8:30 a.m. this morning, we got the Personal Consumption Expenditures Inflation Report. That's PCE for those of you listening at home in the car or wherever you may be. And the PCE is the Fed's preferred measure of inflation. It's what they try to look at in order to gauge where inflation may be going, especially they look at what's called core PCE, stripping out food and fuel prices, and that's generally what they view as kind of the gold standard for inflation metrics. And what we saw this morning was the headline number came in at a 0.3% month-over-month reading, in line with expectations. 12-month PCE inflation came in at 2.5%, also in line with expectations. The core number came in a little bit hotter than expected, rounded up to 0.4. It was, I think, 0.3651 was the unrounded number. And so that pushed the 12-month core PCE from 2.7 up to 2.8%. So overall, the stage continues to be set in a way where, hey, we have not yet gotten inflation down to the area where we'd like to see it. It is probably settling a little bit higher than ideal, and it's not necessarily a problem if inflation just hangs out in the mid to high twos. Historically, that's kind of where it's been. We have not had any extended period of time where inflation has consistently been at 2% or below, and so I think ultimately the question on this is, look, this is for the month of February before additional tariffs on China and Canada and Mexico went into place. What does the inflation picture look like now that those are in place? And with the potential for additional tariffs coming in the next week, how does inflation continue to evolve over the course of the spring, Mike.
Yeah, I think this report on its own does not get far away from how the Fed has described what we're seeing in inflation right now. They've been calling it once again transitory, likely a short-term reaction to tariffs, and I don't think there's anything in this one report that would dissuade them of that. Do you?
No. Here's the one thing that I will say is we have gotten awfully forgiving of these high core PCE prints.
Yeah.
And just to put this in perspective, prior to 2020, I'm going back and looking at the data set, dating back to where it begins. It goes back to, let's see, April of 1959 is actually, no, March of 59. So I got like 80 years here. And outside of like the 1980s and early 90s, here are the core PCE prints of 0.4 or above. I've got January of 2000, October of 2001, January of 05, January of 07, and October of 2009. That's 5 prints in basically 27 years that came in as hot as the one that we just got on core PCE.
Yeah.
So I do want to say, hey, like normally we wouldn't just say this is okay because these kinds of prints on average happened once every 5 years from 1993 through 2020.
Yeah. I'm coming at this from, I have concerns about this print, and should it continue at this trend, you've got a problem that the Fed's going to need to address. In and of itself, I don't know that the Fed reacts to this one any differently than they would anticipate, but it certainly, puts that pressure back on them to say, okay, where are we going with rates next? Are we truly still planning to cut rates twice in 2025, and will the data justify that?
So, look, this is where it is right now. Again, I think that we are, all the chatter today, there's a few different investment banks out with notes on, hey, we're getting more of a stagflationary whiff in the air, because the other data that we got with PCE, we also get personal income and personal spending. And personal income came in better than expected, 0.8% for the month versus 0.4%. Personal spending came in at 0.4% versus negative 0.3% previous and 0.5% expected. And most of that 0.4% growth was where? You guessed it, in autos and related categories, with people trying to front-run tariffs. And so this is why, even though core PCE printed a little bit hotter than expected, a 10-year Treasury is not moving up in yield today. It's down 9 basis points to 4.28%.
That's recession concern.
That is recession concern, because when you have 2 months now where, hey, again, it's 2 months, so it's not a trend yet. Like, it's a line, it's not a trend. When you have 2 months here where your personal spending is increasing at an annualized rate of 0.75%, that's not enough to keep the U.S. economy afloat, given that consumer spending has been what's kept the U.S. economy afloat over the last 6 months. And that's why you have yields moving down today. And this also then gets at the question of, look, stagflation is something that everyone, loves to talk about. Is like, oh, it's my greatest fear, stagflation, even more than snakes. Like, yeah, I'm so scared of stagflation. It's generally impossible for stagflation to occur over any meaningful period of time, because typically when the economy stagnates, the stag in stagflation, people decide, look, I'm going to sit this out as far as buying new stuff, and so price hikes don't take. And so that's why you rarely see the combination of, rising and high inflation and a weak economy, is because usually the weak economy kills inflation, which is why the prescription for high inflation is raise interest rates and basically slow the economy so that, it kills inflation. That's why it works that way.
Yeah. The reason it happened in the 70s was a system-wide shock. The shock was oil. The question that I think economists are raising is, could tariffs be that shock in 2025?
And the answer is, it's possible, but there's also a path where, hey, if the economy slows enough, consumers just say, no, I'm not going to pay for these price hikes, or I can't pay for these price hikes. So that's why the movement that you're getting today in stocks and bonds, you got stocks selling off and bonds rallying, that is not a stagflationary signal. The stagflationary signal is what we saw in the first half of 2022, which is stocks selling off and bonds selling off, that is the stagflationary signal. So, again, we're going to have to see where this all evolves and where it goes. But this inflation print, hotter than you'd like to see, but also already stale because lots changed in the last 4 weeks.
Yeah.
Lots changed. And this
this is a February report, so we'll keep that in mind. And I don't think this necessarily diverges from the opinion that a few have expressed, which is, hey, January and February spending data is just going to be lousy because of a combination of wildfires and cold weather. You could still blame that on those or you could still blame this report on those factors.
Here's the deal. The next 3 months of data, Q2 data this year, is, and those of you who listen to our show, like, you know that I try to tell it how it is. Like, how many jobs reports do we go into? And I'm like, probably not the most important jobs report. Like, you can sit this one out for a bit.
And Tucker's listening on the sideline like, guys, we're trying to get people to listen to this show.
Right,
Can you not do that, please?
I mean, like, I think it was like last week where I was like, guys, this isn't the best show we're going to do. You don't need to stick around for this one.
Yeah, we don't sugarcoat it.
Here's what I am going to tell you. The next 3 months of data that we get on the economy, probably the most important that we've had in a couple of years. I'd say since Q3 of 2023. And it's because this is when we're actually going to see how the economy is responding to potential changes to trade policy, fiscal policy, labor market, all these things coming together over the next 3 months. And so we're going to have a really good sense by 4th of July where the economy's going. Because right now, I'll be completely honest, it's kind of a wild card. Could go either way at this point. There's a path where the economy skates through any confusion and says, yep, we're just going to continue on our merry way. There's a path where the economy slows down. There's a path where inflation becomes a problem. So we're going to have to see how it plays out. I don't have, the super secret crystal ball where I can say here's exactly how this is going to be navigated. But we got some stuff that the market's going to try to sort through and that the economy's going to, show us, hey, here's what's going on. And the next 3 months are going to tell us the answer on that side of things, in my opinion. Anything else that you want to add on the inflation side of things, Michael?
No, let's move along.
Okay, let's take a quick break here. When we come back, piece in the Wall Street Journal that seems mad about something for reasons I don't understand.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visit usvi.com and code VIBE2025.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
All right, so Mike, there's a lot of different questions out there about, tariffs and trade policy and the labor market and this and that. TikTok, sure. There's all kinds of stuff going on right now. Like, reciprocal tariffs next week. There's all kinds of stuff out there.
Liberation Day.
We get this piece from the Wall Street Journal. The Federal Reserve owes America an explanation. Okay, I'm interested. Those of you who have listened for a while, you know that, there have been times where we've been pretty critical of the Fed. What's the quote that Fandetti had a couple of years ago, Tucker?
It was. And if he fails, he'll be one of the biggest monetary wimps in history.
Right, it's
failure.
Failure.
When you get called a monetary wimp by Mark Fandetti, it means something. Those are not terms that we throw around loosely.
Failure.
I really would like a shirt with, it just says monetary wimp on the front of it, and on the back it's got Fandetti's head just saying failure. So I see this piece from the Wall Street Journal, and I go, okay, what does the Federal Reserve owe America an explanation about? And I'm like, is it, why inflation was too high? Is it, why they're not cutting right now? Like, what's the thing that this is about where the Fed owes America an explanation? And it talks about how they're stopping the runoff of their balance sheet because they're nervous that it may affect financial stability if they go further. And I sit there and I go, oh, okay. Okay, let's see if there's any meat on this bone. Like, let's pick at it a little bit. And the answer is no, there's no meat on this bone. It's not causing any problems at the moment. The Fed is actually acting proactively because they've seen it at the end of 2018 that, hey, when we take our balance sheet runoff too far and pull too many reserves out of the banking system, it can destabilize banks and the financial system, and we don't want to do that. And this piece is making the case that, hey, because you're slowing the level of quantitative tightening, it's actually quantitative easing, which is bull-loney.
It's not what those things are.
It's not. Quantitative easing is the act of the Federal Reserve buying bonds. This is the Federal Reserve selling fewer bonds. Those are different things. So I look at this, and I don't know how this is anything that's worthy of news at the moment because it just doesn't make sense.
Yeah, I was trying to figure out, and I read the whole thing too, Chuck, just wondering, like, okay, where's the big reveal? Where's the big question? Where's the big...
Right, it's going to be like, is Jay Powell made out of bonds? Like...
or even like a weight on, okay, you know, hey, the size of the balance sheet overall is...
Too big.
Too big.
The size of that thing, how can you not stare at it?
Yeah, that. Where do you just have these lined up for us, ready to go?
Failure.
There's no big reveal here of, oh, and this is the danger to the financial system if the Fed doesn't explain how they're going. There was none of that in here. They also then completely miscategorized the latest meeting in the very first sentence of this whole thing. The main news from last week's Federal Open Market Committee meeting was the escalating war of words between Federal Reserve Chairman Jerome Powell and President. No, it wasn't. Did you listen to it?
There was one question, and he basically was like, I already answered this. I'm not getting involved.
There was no war of words. Jay Powell was extremely careful to not factor in or answer any questions about what the president thinks should happen with interest rates, whether or not he can be removed, or what Doge is doing. He very specifically said, it's none of my business. I don't weigh in on this stuff. Stop asking. There was no war of words. This is just
like the question
a very confusing piece.
The question that's asked here, like the third to last paragraph, which again, like why the main question shows up there, who knows? Under what circumstances might the ample reserve system that requires a much larger Fed balance sheet come into conflict with the inflation control half of the Fed's mandate from Congress? So basically, what the question that he's asking is, you're telling me that inflation is a problem. Why are you not running the balance sheet off further? And the answer is because we're worried about destabilizing the financial system. And he's basically saying, okay, well, you have more, the balance sheet's bigger than it was 5 years ago, pre-pandemic. Why is that the case? And one easy answer is, okay, look at cumulative inflation since then. And what are we at now in terms of cumulative inflation since then? Probably like 24, 25%?
Yeah, probably somewhere in that general range.
In that ballpark. So, basic back-of-the-napkin math is if you take, it was $4.5 trillion before, and multiply by 1.25, you get $5.6 trillion. So even holding everything else completely stable, you say, okay, in order to maintain a similar level of reserves relative to where inflation is today, you'd probably need 5.6 trillion instead of 4.5. You're at 6.8 right now, and by the way, still continuing to run off just more slowly than before. And so, okay, yeah, it's something where the Fed balance sheet might be bigger than it was previously. It's not some secret. It's disclosed there I don't know if it's every week or every quarter, but it's literally put out there for people to see exactly what the Fed owns. I'm actually going to check it right now.
While you're checking, cumulative inflation measured by CPI, the Consumer Price Index from February of 2025 is 23.3% higher than it was in February of 2020, right before the pandemic.
There you go. Okay, so actually, I'm sorry, we don't get it. Yeah, we get it every week from the Fed. They tell us exactly how big the balance sheet is. So I guess I'm kind of looking at this going, what are we do? Of all the things that are out there right now, Americans need to be concerned about the size of the Fed's balance sheet.
Their TikTok's about to disappear, folks. Come on. We don't need to be worrying about the Fed's balance sheet.
Gosh, this is one where, again, at a different place in time, sure, maybe we could have discussions about this, but I don't know that this makes my top 50 list for, things to wonder about and be curious about over the next 6 to 12 months. It's a non-factor. It's just not something that I think is particularly important here. Mike, one of the things that is wild, and we have to come back to this. I know that there's some other stuff that we're going to talk about in markets, but after this next break, I want to go back to this CoreWeave IPO that is happening today.
Yeah.
Just because it's happening today now at a time where markets are dodgy, to say the least. I mean, you got all three major indices off more than 1% right now. And so I want to talk a little bit more about this because there is meat on that bone, and that's interesting to me.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment management risk, long-term planning. Those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in sell-off mode as traders react to the core PCE index posted earlier this morning, the Fed's preferred measure of inflation, which came in slightly hotter than expected, climbing 2.8% year over year, higher than estimates of 2.7%. Right now, the Dow off by over 1% or 477 points. S&P 500 down nearly 1.5% or 83 points. And the NASDAQ selling off by 2% or 350 points. Russell 2000 is down 1.33% or 27 points. 10-year Treasury yield down by 9 basis points, now at 4.27%. And crude oil down about 0.5%, trading at $69.52 a barrel. Lululemon shares down by over 15% after the activewear company said it expects sales growth to slow this year as consumers hold back on spending amid macroeconomic uncertainty. Meanwhile, auto stocks continue to be monitored following President Trump's latest tariff announcement from imported autos. According to the Wall Street Journal, Trump earlier this month warned American automakers not to raise prices due to tariffs. General Motors and Ford down by 2%, while Tesla down by 3%. Elsewhere, shares in mobile advertising technology company AppLovin are up 4% so far today, following their 17% tumble yesterday, driven by a negative report from short-selling firm Muddy Waters Research. U.S. Steel shares up nearly 2%, following a report that Nippon Steel is willing to invest as much as $7 billion in the American steelmaker to obtain President Trump's approval of their merger. And shares in eye health company Bausch & Lomb down by 6%, one day after the company announced a voluntary recall of certain implantable eye lenses following reports of complications. Wells Fargo also downgraded the stock to equal weight, citing the recall. I'm Tucker Silva, and that's Wall Street Watch.
Mike, when we look at the last, 3 years, is there any area of the market that, in your opinion, has been hotter than artificial intelligence?
The only area you could even compare to would be some areas of the crypto market, but those it hasn't been quite as pervasive as artificial intelligence.
And I'm talking, real economy.
Yeah, fair.
Like the crypto economy is not the real economy. I'm not saying that people haven't made significant gains there. I'm saying, like, when you talk about investable themes in publicly traded companies, is there anything, again, the last year it's cooled off, but anything in the last 3 years that's been hotter than AI?
No.
Not really. The only other thing, in my opinion, that's kind of close is the companies that have the GLP-1 drugs, the weight loss drugs.
Yeah.
Those have been like the two biggest hype areas that have actually delivered for investors. So you've got this company, CoreWeave, that is going through an IPO today. And, gosh, I really don't think this could go worse for them, quite honestly. We covered this yesterday. CoreWeave is an AI cloud provider. Basically, they bought 250,000 NVIDIA chips, and they licensed the use of them out to third parties that want to use them. Their biggest customer is Microsoft, who has about 62% of their revenue in the trailing 12 months. And they wanted to do this $2.7 billion IPO. The $2.7 billion IPO means they're going to raise $2.7 billion based on, the amount of shares that they release and the price of those shares. They had to pretty much cut both the price and the amount of shares by about 20% each. The number of shares actually was cut a little bit more than that. But their $2.7 billion IPO got cut to a $1.5 billion IPO. You say, okay, like 45% smaller. Sure, that's not a great sign for demand. It then was announced yesterday that NVIDIA, who, remember, they've bought the chips from, is taking $250 million of their money that basically they had given to NVIDIA for the chips in order to backstop the IPO. So a full 17% almost of the IPO is being bought by NVIDIA because there still wasn't enough demand elsewhere.
Don't make this more complicated than it needs to be if you're thinking about all this. Yes, it is the giant customer of the company that is being publicly traded that is going and buying their shares to make sure that this thing doesn't fall apart and get a bunch of negative media about artificial intelligence stocks going public.
It's the snake eating its own tail.
Yeah.
So this thing is trying to IPO today, and again, we'll see what happens, but it's also trying to go off into a market that doesn't really want to perform today. And normally in these kinds of situations, the underwriters for the IPO, the big investment banks who get paid, a fee basically to raise the money in the public listing, most of the time, if you see something like this developing, you're like, hey, pull it and we'll try again in 6 months. So there's a couple things that I find interesting about this. The first is that they haven't pulled it. And why I find that interesting is because usually the reason that you say pull it, we'll try again in 6 months, is because if your business is fundamentally that strong, you say, okay, there's no harm in waiting. Let's not devalue, the company by more than we need to in terms of how much, we need to value the shares at and how we're going to raise the money. You say, fine, like we'll do it in 6 months, maybe a year, whatever it might be. If you're not pulling it, doesn't that kind of indicate that you might think things might be worse in 6 months for how your business looks then?
It's an easy interpretation. Like, you don't know unless you are obviously in the C-suite and making these decisions, but it does... That is a potential read of it, obviously.
Like, I know that if I'm trying to sell something and I send someone out to market, I've got a bunch of avocados, and I say, Bill, I want you to go out to market and sell these 100 avocados for $100 wholesale.
Yeah.
And Bill comes back to me and goes, Chuck, there's a problem. People don't want this many avocados at that price. I go, okay, like, what's the deal? He goes, they want 80 avocados at 80 cents. Well, now I'm getting $64 for my product instead of 100. In the avocado case, I have a decaying asset because my avocados are going to be mush in 6 months.
Yes.
Right? Like, they are going to be useless in 6 months.
There's only a 3-hour time frame where that avocado is going to be useful for you.
Correct. And so I have to sell those avocados.
Or make guacamole.
I can't make that much. I could make that much guac. I can't eat that much guac. I sell the avocados because I have to. They're going to go bad. If I'm not selling avocados, but instead I'm selling gold or steel or whatever it is, I might say, no, I'm not going to take a 36% haircut on my sale. I'm going to hold on until someone says I'm going to pay you market value for this. And in the case of a company, and a good company, Mike, isn't the general theory behind why investors want to own stocks is because they're accretive over time and they should earn more money and become more valuable if they execute well?
Yeah, they're generally not decaying assets.
Correct. Like the reason people have historically owned stocks in the U.S. is because they've gone up, not down. Like, basic, simple thing. So this to me is, we've talked a lot about how there have been like some yellow flags here and there on different things. This IPO and the way it's going off is a screaming red flag to me.
Mm-hmm.
It's just like it's in my face, like right there. And I don't know exactly how it's going to end up playing out because you never do with these kinds of things. But gosh, you can't imagine it going any more poorly than it has gone to this point. And I don't know. We're going to have to see what happens over the next 6 months or so, but just screaming red flag right in my face right now about something, whether it's AI, the market as a whole, I don't know what, but it's just flashing.
And I know you've probably never heard of this company prior to this week if you're listening right now, but the message is that it's not in some tiny corner of the market that nobody cares about. This is front and center in the artificial intelligence market, which has driven the entirety of the market for the last 2 years.
Let's take a quick break. When we come back, I have one. Sorry, Mike, I have to go off grid again. I got to talk a little bit more about some University of Michigan sentiment survey data that we got, and I want to talk about what we're seeing on that front because I saw a couple other things, and then maybe we'll get to some other stuff about stocks. We could talk Lululemon because yoga pants. Always a fun discussion here on the Financial Exchange, given how frequently Mike and I wear them.
Yes.
And so
you can only see my top half, but the bottom is obviously in Lululemon yoga pants.
We'll discuss those and more when we return.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
All right, Mike, I wanted to touch on one other piece of the University of Michigan Consumer Sentiment Survey. The first version came out last week. We got the final numbers this week. I do have an interesting question. So University of Michigan, they published their Consumer Sentiment Survey, and then a week later they published the revisions of it. It's a sentiment survey, so what are you revising?
Yeah.
Just like I'm sure that there's a reasonable explanation. It's probably, hey, we got more responses that came in over the subsequent days or something. But
that's got to be the only. Hopefully, that's the only thing they're revising.
You don't go through and you're like, well, let's adjust it. That I'm sure that it's something that's legit. But I just always find it humorous that I look at my calendar and I'm like, didn't they just do that? I'm like, oh, it's the revision. Why are they doing a revision of a survey?
Yeah.
Anyways, one of the things that they ask people is, do you expect to have a higher income next year? And here's one of the things that's really interesting on this is during the and generally in healthy economies, it's usually about a 50-50 split. 50% of people say yes, 50% of people say no. Even during the depths of, March 2020 and even during 2022 when the economy was stagflationary for the first half of the year, you never got below 45%. The only time that you dipped below there was literally March of 2020, where surprised that it wasn't worse. But
before that, to get below 45%, you were looking at 2008 through 2013, when anybody listening now probably remembers the economy back then.
The numbers on this just got to 36.5%, which is, again, in the realm of where we were in 2008 to 2012. And you could look at this and you could be like, oh, well, these surveys are showing, this huge partisan bias and yada yada. They may be partisanly biased, but they were partisanly biased back in 2022 and never got this bad. And so does this mean anything? Not necessarily. But it's another data point that you throw on the fire and say, hey, this could be something, and we'll have to see how it goes. The interesting piece is this has never been something, and this is why I think you just say, hey, throw it on the pile and see what happens. When it dipped back during the 2009 and subsequent recession and afterwards in the recovery, it wasn't a leading indicator. You look at where the dip occurred, and it was late 2008, early 2009.
Yeah, it was coincident. It means it happened at the same time as a big dip in economic activity.
So, trying to make sense out of, could this be a leading indicator now? I have no idea. There's been so much this business cycle that has been different from what we have seen previously, but I looked at this and I saw it and I said, oh, that's kind of notable. Who knows exactly what it means, but throw it on the pile and we'll see what happens.
Folks, we are nearing the end of March, meaning we are nearing the end of time to get your hands on our brand new guide from the Armstrong Advisory Group. And it's all about actually financial advisors and exactly what it is that they do. We're seeing a market today that's playing out very differently than what we've seen over the last couple. The same ideas and movers of markets that really worked for the last few are not working in 2025. And there's a lot also changing or on the cusp of changing when it comes to tax policy, employment at the federal level, and just what could be next when it comes to, hey, how much Social Security am I going to get and will it be taxable or not? Those types of questions come up with financial advisors all the time. Our guide this month, called What Can a Financial Advisor Do to Me?, outlines exactly what financial advisors get into. It's not all about the investments. It's not all about portfolio allocation. It is depending on the relationship, a consultant that you have at your side to walk you through those complex financial decisions that you face throughout life, whether that's life insurance, buying your first home, deciding how to contribute to a retirement plan, or finally pulling that stage and walking away from work for the rest of your life and retiring and feeling confident enough to do so. If you'd like to get your copy of our brand new guide on What Can a Financial Advisor Do for Me, the number's 800-393-4001. Again, that's our free guide from the Armstrong Advisory Group, and you can request it by calling us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Lululemon, they missed their outlook and expect their sales growth to slow this year. They're expecting their sales to rise 5 to 7% in 2025, down from 10% growth last year. And as a result, the stock is currently down about 15% in trading today. What makes this interesting to me is we've been talking a lot about the kind of this bifurcated economy where, hey, the high-end consumer hasn't really stopped spending. The low-end consumer is feeling stressed, stretched, and is, really, kind of tapped out at this point. And Lululemon, their stuff is not only not cheap, it is very expensive.
It is.
And this, to me, raises an interesting question because it's, hey, is this an execution issue with Lululemon? Or is this, one of those signs that the top-end consumer may be pulling back? To this point, I think it probably falls closer towards the former, meaning an execution issue on their side, just because we're not really seeing too much else here right now. The only other place that you're starting to see this develop is with airlines, where they are indicating in the last day or so now, after some warnings a couple weeks ago, they're now starting to pull back capacity for flights over subsequent quarters. So they are, again, airlines don't do that unless they say we're not going to be able to fill these. And so you are starting to see signs from airlines that they are seeing weakening demand. So there's a few things that are out there that are starting to be concerning on the consumer spending side. It's still not really making its way into the hard economic data, but you got a couple anecdotes that are piling up now for the high-end consumer, whereas before this was mostly relegated to lower-income customers.
Yeah, I'm with you. I think I'm much more willing to trust what that could mean from an airline perspective than I am with a fashion brand, because there is so much execution risk on fashion, right? That
Totally.
is what Lululemon is, and we have seen big-name fashion brands have their moments and then fade into the sunset rather quickly, and that could be, some execution problems for Lululemon. It could be, as you mentioned, a pullback in higher-end consumer spending.
So you've got that going on with Lululemon here, and how much does their stuff cost these days?
If you have to ask, you can't afford it, Chuck.
Honestly, probably right. Let's take a quick break. We got hour 2 coming up. A whole bunch more to cover on the Financial Exchange.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically, you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 here on the Financial Exchange. Pardon me, let's start over again. Hour 2 here on the Financial Exchange. Chuck, Mike, and Tucker with you, and we're with you during another leg down in a market sell-off. So the Dow is off 565 points, the S&P is down 91, NASDAQ down 396. So all three major U.S. indices off between 1.3 and 2.3% at the moment. This on the back of, the more I look at it, a sneaky bad PCE report today. So the Personal Consumption Expenditures report, we get a few different pieces that come out in it. The one that everyone was focused on going into today was the PCE price index, basically the Fed's measure of inflation. And it came in hotter than expected at 0.4% versus 0.3% on the core number specifically. The headline number was in line at 0.3. So you'd say, okay, if this is the case, okay, stocks are selling off based on inflation fears. That's not what's happening. And the reason that I can tell you that's not what's happening is that if it were inflation fears, Mike, what happened to bonds during 2022 when people were nervous about inflation?
The interest rates shot up.
They went
sold
up.
off.
Bonds sold off. Yields went up. Today, yields are down. The 10-year Treasury is down 9 basis points to 4.28%. 20-year Treasury down 8.5 basis points. 1-year Treasury down 3.9 basis points. Whole yield curve is seeing money flowing into it. That doesn't happen if people are nervous about inflation. And so here's the second part of this report that I think is actually the one that is spooking the market. We also get personal income and personal spending. How much did you make? How much did you spend? Incomes came in just fine. 0.8% for the month compared to 0.4% expected. Okay, that's good. Incomes are up. Personal spending came in 0.4% for the month compared to expectations of 0.5%, and last month was negative 0.3%. So spending in January dropped 0.3% and then rebounded 0.4%, basically getting it back to the same place that it was. But here's the kicker. Those numbers are reported in nominal terms, meaning they're not factoring in inflation. And so if you actually factor in the inflation that's reported in the very same report, the past 2 months came in at real consumer spending of negative 0.26.
We're
Negative
buying less
0.26.
stuff and services.
In real terms, people are buying less. And so if you look at this, you say, okay, I got people buying less. I got all kinds of sentiment data that's suggesting people are nervous. And this is data from February before the market started freaking out about the possibility of tariffs and such that were implemented in March. So my read on this is the market is a little bit freaked that, hey, maybe growth isn't as strong as we expected. And as a result of this, by the way, the other piece, and again, this is not the be-all, end-all of, economic research, but the Atlanta Fed runs a nowcast called GDP Now. We reference it quite a bit on this show, and it's basically their estimation of where U.S. growth is for the quarter at this point through the quarter. So it's not a projection of where it's going to be. It's saying, based on the data we have, here's how fast we think GDP growth has been this quarter. It's skewed down this quarter because of a kind of weird thing related to gold imports. I'm not going to get into it. If you really want to read about it, you can go to the GDP Now webpage, and they have a whole little segment on it. Stripping out the gold issue, okay, they are still now projecting that GDP for Q1 at this point is running negative at minus 0.5%. Now, we covered earlier this week, I think it was maybe Monday, maybe Tuesday, who knows, Connor Sen from Bloomberg Opinion said, hey, a lot of the stuff that is in this quarter may be caused by, bad weather. Everyone was sick in February. Who knows? A lot of different things that could be weighing on this. So you might see a bounce back in Q2.
Mike Santoli offered the same opinion just yesterday.
Yeah, it's not just one person saying this.
He gave us that opinion directly, that, hey, it could just be that.
But this is the first sense that we've started to get on data sets that matter, that, hey, maybe there is a little bit of weakness that's starting to develop in some of the hard data that's out there. It's still not pervasive. It's not everywhere. But you're starting to see some stuff developing where you're like, okay, we'd prefer to not see that continue. And as, again, Connor and Michael both discussed, hey, there's a chance it doesn't. Q2 could have a very decent rebound if that stuff goes away. So this is not a doom and gloom and, this is, imminent and there's no way out of it. It's much more, okay, we're starting to see some stuff, and you need to see a recovery the next few months, and this is why I'm pointing to Q2 economic data as some of the most important that we've seen in the last several years here.
You can use this data to paint, I think, one of two pictures. If you want to take the pessimistic view, spending is dropping off. We're seeing that confirmed in a few areas. Worries about the future are up. People are telling you that they don't think they're going to earn as much money. They're worried about losing their job. They're worried about keeping up with prices. And the pessimistic view would be that combined with uncertainty from businesses around tariffs could lead to the recession that everybody's worried about, right? Whether it's sparked entirely by tariff fears and that on the business side, whether it's sparked more by consumers pulling back spending, I would be more concerned about the consumers pulling back spending, then you could have this path towards recession. I think the other way, what you need to believe about this data to come to another conclusion would be, hey, we're getting a bunch of bad data about January and February. That's all based on illness like Chuck talked about and wildfires in California, and that same data is going to bounce back when we start getting the reads in March and April of this year. And the tariff stuff is being overblown. That's what you need to be processing in your mind and believing fundamentally if you're going to be kind of bullish about this turnaround scenario right now. And I'm here to say that either is possible. I'm not convinced that the bad data that we got in January and February is entirely irreversible.
No, look, we've had bad runs of data for a month or two previously, and the economy gets itself back on the horse and says, okay, giddy up, let's go where we're going next. We're going to have to see what the data shows the next few months, and we're going to have more clarity. By mid-June, 4th of July, somewhere in that range, we'll have a pretty good sense of, hey, was this a 1 or 2 month hiccup, or is there something bigger afoot here?
In the meantime, stocks are getting punished, as we talked about. The S&P now with these losses today is off about 4.5% for the year. That's from January 1. The NASDAQ, on the other hand, off nearly 10% from January 1 and more if you pick the highs on both of those indices.
Other things that are moving in markets, we talked about stocks and bonds. Oil prices falling 53 cents today, down to $69.39 on West Texas Intermediate. The AAA national average for gas prices continuing to rise modestly as you get through that conversion over to summer blends, up 2/10 cents overnight to $3.15 7/10. And we've got gold today up $15.20 an ounce. This is one area where I think you can look at it and say, hey, the action in gold combined with stocks and bonds represents the potential for concern about stagflation, where you've got stocks and bonds moving in a way that is talking about the economy slowing, gold moving the other direction saying, hey, if we don't deal with this inflation issue, you have the potential for higher inflation during a time of economic weakening. I don't know that I entirely buy that that's, a sustainable area that we end up in, but I think that's what the market is saying today is it's kind of nervous about everything.
But mostly recession.
Let's talk about egg prices, something that we can be less worried about right now. According to the website Trading Economics, the price of eggs per dozen is down to $2.92 right now, down from $5.81 at the beginning of the year. And so egg prices starting to come back. A recent USDA egg marker report.
Didn't know that existed.
You ever follow the egg marker report, Mike?
Nope.
Tucker, what about you? You
follow them on Twitter, sure, yeah. Instagram, absolutely.
They're on the gram? Oh, didn't know that.
You betcha.
Didn't know that. I bet egg Snapchat is wonderful these days. Egg TikTok's even better, to be honest.
If you had told me that there was a thing called an egg marker, I probably wouldn't have guessed that it was a report from a major federal agency.
Okay, I got to be honest. I feel like this is probably a typo in this piece, and it's supposed to be egg market report.
Yeah, that makes more sense.
It's probably a typo.
Yeah, okay.
The lack of editors in newsrooms these days is really a problem. I'll just take the time to say that because it's probably the egg market report, not egg marker report. In any case, a recent USDA egg something report said that egg inventories have increased and demands have eased slightly. And with no additional outbreaks of bird flu reported in March, you've got flocks doing their flocking thing and just
not dying.
Out. They're just egging out right now. So that's going on there. So good news on the egg front. Let's take a quick break. When we come back, we'll do trivia, and then we'll ask the very polite question, how have you not lost your job to AI yet? It's coming up right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Financial planning is hard enough. That's why having the right advisor on your side is so important. This is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called What Can a Financial Advisor Do for Me? It's available by calling 800-393-4001. The guide discusses a variety of areas where an advisor can help you, from developing a plan that may achieve your financial goals to giving you the peace of mind necessary to handle consistent market volatility. A skilled advisor is much more than a money manager, and we wrote this guide to help you learn about the variety of ways that an advisor can serve you. The economic climate today is challenging to say the least. If you're in need of a financial professional, call us today and get your new free guide called What Can a Financial Advisor Do for Me? That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And on this day, back in 1969, former President Dwight D. Eisenhower passed away at the age of 78. Eisenhower is one of 3 generals of the Army to become President of the United States. Trivia question today. Who are the other 2 presidents that were previously General of the Army? Once again, who are the other 2 presidents that were previously General of the Army? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the fourth correct response to text us at 617-362-1385. We'll get that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, during the last segment, we asked the question, hey, how come you haven't lost your job to AI yet? And the answer is because AI is really good at single tasking. Hey, write me a story about tacos.
Mm-hmm.
Okay, great. It's going to do that. And however much detail you want it to put in and indicate, it can do that.
It's not great at editing a news story to make sure that you get the USDA egg market report instead of the egg marker report, because it doesn't really have the context to know.
But the other thing is, anything that's kind of messy where you have to jump between different systems and different data streams, it can't really handle that right now.
Yeah.
And, again, we're still in the early days of this, so maybe that's something that happens. But how many of us have a job where it's just, hey, I'm going to go and I do one thing all day and that's all I do, and I never have to, do anything else. When I say one thing, I'm not saying, you're just, working at Starbucks making coffee, or you're just processing insurance claims. I'm saying when you go to process those insurance claims, you probably have phone conversations that you need to have with people. Then you also need to be able to read documents. You need to be able to input data into a third system. You might have, supervisors that you're talking to at the same time and reports that you need to produce. Being able to pull all of that together is not something that AI is capable of doing today. And so what we see is things that are really like single task. And in particular, I think the places that are most threatened right now are the places that don't involve the places that are, focused on writing and or anything text related that doesn't need a human touch to it, that, that talks about like emotions and how we feel and stuff that's like what it is to be human. Technical writing is an example. If you're not familiar with what a technical writer is, they're the people who take what you're supposed to do in Microsoft Word and make it into the manual for what you're supposed to do. That kind of stuff can absolutely be done by AI right now. And if you're in, basically what I'll say is like an unemotional form of writing job, probably not a great place to be for the next 5 years.
Let me give an example from our own industry, Chuck. So,
sure.
This is not a technology that I use or my company uses in our day-to-day work, but one of my first jobs working for a financial advisory firm, which is what I do, and I'm not, doing the radio show right now, was going around to meetings with people and taking notes for people that knew stuff better than I did. Right? I was like 20-something years old, and my job was to sit there, shut up, and take notes.
Yes.
That was all. Today, many financial advisors are using AI technology of one sort or another, where either it's joining a Zoom meeting as a virtual AI agent, because a lot of meetings are obviously conducted via Zoom, or it's a device that's actually listening in on a meeting that you are conducting in person, and it's transcribing the entire meeting, as well as taking organized notes on this is what I need to do as a follow-up, this is what I need to do a week from now, a month from now, a year from now, when it involves my relationship with that individual and the advice that I am providing them. It then takes that transcription, stores it for you, loads it right into your client relationship management system, sets you reminders for what you need to do, and like I said, that was kind of an entry-level job that I personally performed 12 years ago in my career. That's where I think you are potentially, I'm not convinced yet, but potentially starting to see some of the effects of this. And go talk to any of your friends or family that are graduating seniors in college right now and looking to enter into the areas of investment banking, insurance, commercial real estate, financial planning. All of these types of career paths have a job like I just described in them. And they're having a really tough time getting those jobs right now. Is that AI related? Is it something else related? Recession worries and just hiring freeze related? I don't have a perfect answer, but that's where I think you're starting to see it first.
Yeah, I totally agree. And so we'll have to see how AI's abilities evolve over time, because remember, the stuff that's out today is built on the chips from a year or two ago. The new chips, the stuff from NVIDIA, the Blackwell chips that they started delivering in Q4, the actual product from that is probably not showing up until, I don't know, second half of this year. It takes some time to actually know that you can do what you want to do with the capacity that you now have. So I think that this is something where, again, I admit that we may see, some important evolutions here as we go. I mean, look, just look at how computers evolved over the last 30, 40 years and what they can do now compared to what they used to be able to do in the 80s.
Right.
But it takes time to get there, and we're going to have to see what the evolution is. And the other piece on this that I think we do have to be aware of is, this is something that is now non-native technology to probably 80% of the workforce. I would say if you're over 30 years old, this is something that is, kind of what it's what computers were to people in that demographic in the 90s. Because it's a completely different way of potentially handling your workflow and doing things and understanding how to go about it. And so, as someone who's not in that younger demo anymore, I also realize, hey, there might be kids coming out who are 23, 24, 25 that can use this stuff way better than I can. And being able to understand that and be humble enough to say, yeah, can you, take the lead on this and go with it? That's something that I think we need to understand too. And I may be missing the boat on it just because I'm not plugged in enough to be able to know just how good these things can be. Let's take a quick break. Markets remain in negative territory. When we come back, we have the trivia answer, and then we'll talk a little more AI right after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically, you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston. Trivia question today was, who were the other two presidents that previously served as General of the Army? That would be Washington and Grant. Eisenhower, of course, was the other. Winner today of the brand new Financial Exchange Show t-shirt was Dave from New Hampshire. Congrats to Dave. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Let's talk a little bit about AI and its impact on the job market. There's a great piece here from Bloomberg. It's titled, Everyone's Gaming the Job Market with AI. And it's pretty much... so whether you're talking about people building their, customized resumes for every opening based on AI, basically saying, hey, here are the requirements, build me, a resume that uses my skills and makes them presentable for this employer, to then maybe be selected by an artificial intelligence on the, employer side of things, because, hey, we're getting so many resumes that we can't weed through them all manually, so we had to, go out and get an AI vendor to go figure out, who we should actually interview. Everyone seems to be using AI to do this, and I think the question is, are we actually ending up with better outcomes or not?
And specifically, one of the examples that was given more around the cheating conversation was a test that many employers are seemingly giving out to people interviewing for coding jobs. And it's basically, you just have to go memorize how to code something. And, one Columbia student was just kind of annoyed with this whole thing. Like, why would I have to memorize something in my real job? This seems silly. So what he did was he built a bot. He built an AI bot that allows you to, while these things require you to be sharing your screen at the same time that the interview is being conducted, so you can't cheat. Well, he built a workaround that allows you to use ChatGPT, search for the code, create the code, copy and paste it into the screen that you are being monitored on, and basically pass the tests very easily without actually the employer knowing. And so this individual says he now faces expulsion from Columbia, but has received multiple job offers from executives at tech firms looking to hire him based on the impressive code that he wrote. So it comes back to a thing that we talked about, Chuck, a few weeks ago. I think when it came to like students using AI for test taking and things along those lines, which is nobody's going to trust anything conducted over the internet anymore. Like, you're going to get back to in-person closed book tests written on Scantrons. You're going to get back to in-person interviews, right? Like, if I am a tech executive hiring somebody for an interview, for a high-powered job, rather, I might be willing to use some of these tools like Zoom to conduct meetings initially, but I'm probably going to fly the person out and conduct an interview in person to check the actual skill sets and personality of this person that could have been masked by AI.
Right. It's going to be wild that one of the potential things that we get out of this is people becoming less reliant on computers because they need to have that personal trust again.
Yeah.
It's kind of one of these things that could go the opposite way of how people think it will.
AI is not the only thing pushing us in this direction, right? It's AI. It's the number of financial scams that are just conducted on a day-to-day basis that I think is, all of it to me at least, and I could be completely misreading this, maybe I'm wrong, but it seems to me that it's pushing people more and more to say, I can't trust what I'm finding on my phone, in my email, over the internet. I need to conduct important types of tasks in person with sources that I can see in front of my face.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they can also be problematic. Call Cushing & Dolan, the experts in elder law, by calling 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Months running out here, folks. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today by calling 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Once again, only a couple days here left in the month of March, so call to get the guide at 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Mike, do you want to talk about Tim Cook going to China, snacking, or
something else entirely?
Or young Americans losing confidence in the economy?
Do I have to choose from one of those?
No.
I want to go off the grid. You did earlier. Mayor Wu in Boston is talking about expanding office to residential conversion, and she wants to build dorm rooms, which, okay, this might sound crazy, but this seems to me like a good idea. One of the many problems with office to residential conversion is that you need entirely way more plumbing if you're going to build, 1,000 apartments in a big commercial office building.
Sure.
And put in bathrooms in each of them. A dorm doesn't need that. It needs a few common area bathrooms and does not necessarily need a kitchen and bathroom in every single area. And so I think this could be a good idea. The problem that I see is who wants to buy dorm rooms?
Well, what do you mean buy dorm rooms?
Like, let's say that a developer goes and builds this and goes and converts it from an office building and converts it into a dorm room. The obvious potential buyer of that property would be a university who doesn't pay taxes. And so I view that as a bit of a problem in this whole idea of, hey, these commercial office buildings aren't bringing in as much tax revenue as we need. to, hey, we're going to convert them to dorms, which could be owned by universities who, as nonprofit entities, don't pay property taxes?
I'm trying to just think through this just to see how it sorts through. So one option is they could lease the space back to the university.
Yep.
University doesn't have to buy it.
Right.
Great. They don't have to do like a big capital campaign or something like that. So that's one option. Option 2 is kind of dystopian, which is like, hey, are you ready for communal living? Not really. I don't think that would go very well.
No.
But, not college students living in areas with, like, centralized bathrooms probably strikes me as something that there's not a lot of demand for, so that's probably a dumb idea. I'm just hashing this out, like, as we're talking, so.
Get the flip-flops.
Again, Northeastern University does not own most of the apartments that their students rent to live in, so, like, that's not a problem. But, again, I feel like if you do convert it to dorms, then the natural progress there is that the university wants to own it. So unless you're going to say university is not allowed to own these dorms, then I think you're just going to kind of create a tax problem that you already have.
Yeah, here's the question. There's two problems out there. One of them is related to tax revenue. The other is related to housing availability.
Yeah.
This can potentially help with the second one because even if, like, let's say that a college buys this and, okay, they're not paying property tax on it, if that's the case, it still is moving college students who would otherwise take up other available housing inventory into new inventory that wasn't there before.
Agreed. It's helping on that front.
It solves that problem, but not the other.
It might balloon the other problem is part of my issue.
Yeah, it definitely could. It's a real possibility. Let's take a quick break. When we come back, Paul LaMonica from Barron's joins us right after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
All right, as promised, we're now joined by Paul LaMonica from Barron's, and we're going to talk about the Terrific 10 today. Paul, how are you?
I'm good, thanks. How you doing?
I'm doing well. Paul, everyone's been all about the Magnificent Seven for the last couple of years. What are the Terrific 10?
Yeah, the Terrific 10 are a group of Chinese tech stocks that might be better bargains and growth plays right now in light of what's happening in China's economy. YT Boone, a strategist at Neuberger Berman in Hong Kong, I spoke to him about this group. He kind of coined the phrase. So you've got Alibaba, Tencent, Baidu, BYD, the electric car company. Those are some of the companies. Xiaomi, the electric car and phone company. Those are some of the companies that are part of this group that he's dubbed the Terrific 10, that he thinks could benefit from the fact that there's, more bullish sentiment for Chinese tech in light of some of the stimulus that's coming from Beijing, and also the DeepSeek phenomenon. DeepSeek really, I think, reminded everyone that China is trying to innovate with some cheaper AI technology that could be, a competition to, ChatGPT and a problem for NVIDIA. So that's, the kind of the thesis there.
Paul, two potential issues that come to mind when looking at this. The first is that Chinese markets as a whole have not generated really any kind of meaningful price return for investors in 20 years. If you look at just like the big Chinese indices, obviously this is a much smaller subset of companies, but how does one get past the fact that Chinese stocks in general haven't really performed very well for U.S. investors for a couple decades now?
Yeah, it's a great question. I think that what an investor needs to consider here is that this is not necessarily a bet writ large on the Chinese economy and Chinese consumers, and that you may not necessarily want to be buying any ETFs that mirror, say, Hong Kong's Hang Seng Index or the Shanghai Composite. But if you look for pockets, there's Crane Shares CSI China Internet ETF, for example, that holds many of the companies that I've been talking about. If you focus more on the China tech stocks that have been doing well this year, that's potentially where investor could find some value, as opposed to making a full-blown wholesale bet on the Chinese economy and Chinese stock market.
Second piece is, okay, so let's say that we get past that and say, yeah, this is a narrower subset of companies. There still is the potential for significant disruption to business activity because of, different trade policies and so on and so forth. How does one navigate what that looks like on these?
Yeah, another great question. Obviously, you're referring to the tariffs that are likely kicking in, barring some last-minute change. Next week, China already subject to some tariffs and potentially more. I think what you really need to do is to try and find some of those companies that maybe don't have as much exposure to the U.S. markets, that are not big exporters. So Alibaba, for example, yes, that is a company that has some U.S. presence, primarily with its e-commerce and cloud offerings, but by and large, it's really more of a Chinese-focused company. And you look also, BYD Group, the electric car company. Chinese electric cars aren't going to be coming to the U.S. anytime soon,
Sure.
if ever. But I don't think you necessarily need for BYD to be a competitor with Tesla in America for it to be a solid investment, as long as they continue to generate strong sales growth from the Chinese consumer, who may be more inclined to buy a domestic Chinese car over Elon Musk's Tesla, especially if there are retaliatory tariffs that come into place from Beijing, in response to the U.S. Trump tariffs.
Very good. Paul, appreciate you joining us today. Thank you for the time, and I hope you have a great weekend watching a little college basketball.
Yeah, definitely. It's been a fun tournament, despite what my bracket would say.
You and me both. That is Paul LaMonica talking a little bit about the terrific 10 Chinese stocks. And, again, thank you, Paul, for the time. Mike, what do you got for me for Stack Roulette here?
What I have is new and inventive recession indicators. Young Americans are posting about them in kind of a joking fashion online, of ones that we don't typically look at. There's been several that they've pointed to. One was price drops on used clothing on a platform called Depop, which I am not at all familiar with. Others point to people learning to play harmonica or wearing brown clothing. I'm not familiar with those ones. I can see how used clothing prices going down would be a recession indicator. I don't know why playing the harmonica would be, but every generation has had these types of things. Warren Buffett famously has a recession indicator of men's underwear sales.
Yes.
One of my favorite out there. And his thesis here is, look, nobody can see it, and when men fall on hard times, they just don't buy new underwear. They just stick with the old, stuff where the elastic is starting to go. And so, interestingly, have no idea what's caused the sell-off, but I was taking a look at Hanesbrands stock, ticker symbol HBI, whose shares are down 28% this year. Can't tell you Fruit of the Loom because Warren Buffett owns Fruit of the Loom, so we don't get disclosed quarterly details on their sales. But yeah.
So you're telling me that Warren Buffett owns one of his indicators?
He does, yeah. He saw the proprietary.
He wants to go right to the source.
Yeah. He doesn't want anybody else getting those details on those men's underwear sales.
Yeah, Buffett he walks down to the loom and he's like, guys, what are we looming today?
Doesn't even really care how their sales are doing, whether or not they make any money. He's just very focused on whether or not we're in a recession at any given
I want to
point
be
in
the
time.
only one who has access to the data from the loom. Send the loom data to my office hour by hour.
Mm-hmm.
I can see that. Taking a look at markets as we head towards the bottom of the hour. No real movement from where we were at the top of the last hour, an hour ago. The Dow is off 539 points. The S&P is down 87. NASDAQ down 388. So, again, about a 1.25% to 2.25% sell-off that is taking place across U.S. equity markets. And not really confined to any one particular area. You do have the most pain being experienced in tech. And, yeah, I guess you could make a case, look, healthcare and utilities are holding up better than the rest of the market. So, again, kind of this defensive, recessionary posture that this market is taking today. But you've got an awful lot of stocks that are in the red. It is not concentrated just in tech. Financials taking a hit, industrials taking a hit, energy. It's It's pretty widespread here. We are done for the day and for the week. Hope you all have a great weekend, and we will see you back here on Monday for a busy first week of April.